Hey everybody, it's Gerald here. In this video, we're going to go over Lululemon stock, ticker symbol LULU, and I'm going to go over whether I think this stock is a buy or a sell. So Lulu stock is down nearly 30% fresh off of its Q1 2025 earnings reports, right? It is its biggest decline in years, right? So the company beat its expectations in terms of its revenue and earnings per share, but the stock is significantly lower. The stock was once trading at 330.78, now currently trading at $239, right? And of course, there's a multitude of reasons of why the stock fell. First and foremost, the company cut its full year guidance, right? The company cited a dynamic macroeconomic uncertainty, both with new tariffs as well as a decelerating United States economy, right? So in terms of the tariff and margin pressures, they warned that with the tariffs, it would increase their costs and overall compress its profit margins for the entirety of the year here. So the profitability metrics will ultimately fall down for the full year here. Slowing United States revenue growth, the company, while maintaining strong international sales, growth in the Americas is slowing down significantly due to a multitude of reasons, one of which is weak consumer demand, as well as an increase in competitions from the likes of Alo and Viore here. So the stock being down nearly 30%, the stock year to date is down nearly 37.74%. Is this stock, Lulu, as of June 15th, sitting at a price of 239.11. So we're going to go over its pros, the cons, the opportunities, as well as the threats here. So in terms of its strength, Lululemon is a globally recognized name, right? Particularly those with a younger consumer, as well as household incomes below $100,000, right? So emerging brands like Alo and Viore have to fight the likes of a global brand such as Lulu here. It also has very strong international growth momentum. This is a company that is emerging into key markets such as China and Canada to offset that slower United States growth, right? So recent revenue growth of 5 to 7% domestically, this company is growing at a substantial rate internationally here. This company is also with very strong operational resilience, right? Strategic initiatives like the New e-commerce program and supply chain optimizations pretty much address a lot of that inventory challenge while enhancing a lot of that sustainability for this company. This company is a very strong, financially healthy company. They boast a very strong net margins of sitting roughly around 20.72%, with return metrics of roughly around 18.01% for the return on equity, and the return on assets sitting around 10.19%. Remember, for the profitability metrics, I'm generally looking for 10% and above and return on assets of 5% and above. This company is exceeding those expectations greatly in terms of its sector as well as just individually here. So the company is demonstrating very strong and efficient capital allocation as well as profitability metrics here. This company is also with a very diversified revenue stream. So apart from e-commerce, this company operates in the stores as well as growing internationally as well. So as far as the weakness, the company is facing many different challenges in the North American market, right? So analysts are projecting nearly a 4% decline in their comps from half of 2025 and onward, overall due to weaker consumer spending and overall macroeconomic pressures, right? We have rising inflation and credit card delinquencies in the United States. A lot of that uncertainty is weighted very heavily into Lulu stock right now, but sitting at a price to earnings of 15.28, is this stock a buy here? This company is also in the premium pricing category, so this company is actually going to get hit a lot harder in terms of the budget conscious consumers as compared to established brands such as Nike, Adidas, and other mass retailers that offer that cheaper athleisure options here. They're also very overly reliant on the women's apparel brand. They are expanding the men's category, but they right now remain extremely dependent on that women's apparel here. So making that shift is going to be a challenge for this company going forward here. In terms of the opportunities for this company has many different levers to grow the company. In terms of the international expansion, they are aggressively expanding in China, where Q3 2024 revenue surged by nearly 30%, and they're entering into other new European markets such as Italy, Denmark, Turkey. In terms of the threats for this company, like I said, they've been going through a lot of issues with United States sort of macroeconomic conditions, such as the rising inflations, the credit card delinquencies, and so forth, right? But on top of that, the company is going through a lot of different challenges in terms of the competitive market dynamics, right? So the likes of Nike and Adidas are gaining sort of market share in that athleisure sector, threatening a lot of that premium pricing strategy that Lulu has here. The company, like I said, is offering weak forward guidance, right? So revenue growth is projected to grow at around 6 to 7% with full year guidance of roughly around 11.2 to 11.3 billion, which is falling a lot shorter to analyst expectations and ultimately causing the stock price to fall here. So now that the stock is 30% lower than prior valuations, is this stock a buy? From an intrinsic value standpoint, it's looking quite attractive here. The stock's intrinsic value sits around 346.14, while the current price is sitting around 239.11 today, right? So as of June 15th, Sunday here today. So offering nearly a 45% buffer, right? For the intrinsic value, I'm generally looking for 20% and above. This is offering me double that, right? So as far as an intrinsic value standpoint, this company is very, very attractive. I'll then be looking over into the hedge funds and institutions. What are the big money doing? In terms of institutional sentiment for Q1 2025, it is overall bullish. I'm seeing 55% bullish compared to 45% bearish, right? So what exactly is bullish? I'm generally seeing either an opening, an increase, or a hold in their positions, right? And what is bearish? Bearish is a decrease in position or just closing out the position completely, right? So 12.9% closed out completely. So a very small fraction of that of the institutions are closing out their position completely, which is actually a very good thing to see in terms of the overall wide landscape of what the institutions are doing overall, right? I'm seeing 55% either open, increase, or holding their positions here. As far as institutional investors, I'm seeing Harry Segalas of HS Management Partners decrease his position slightly by around 13.3%. He's up around 171.6%, sitting at roughly around a 55.2 million valuation for Lulu stock here. It's very likely just some profit taking here. He's up 171.6%. Valuations were getting a little bit trading on the premium side, but he's still maintaining a rather significant size of 4.46% of his total portfolio here. As well as I'm also seeing Joel Greenblatt of Gotham Asset Management increase his position by nearly 8%, right? He's up around 31.7 with an average buy price of 181.55. And he has nearly $20 million in his position. Not a huge position, sitting around 0.16% of his portfolio, but overall, it's a very good thing to see in terms of what the institutions are doing here. I'm also seeing Israel Englander, right, decrease the position rather significantly by about 37.5%. Like I said, I don't want to just pay attention into the bull case. I want to see what people are doing in terms of they're selling out positions, they're decreasing their positions, and from this standpoint, it looks like he was offsetting a lot of his risk here. His average buy price was sitting around $286, so he's down nearly 16.4%, and he actually decreased it by a wide margin. It's still sitting at a hefty value of 62.8 million, but it's about 0.03% of his entire portfolio. Overall, though, I'm seeing more neutral sort of sentiment among these institutions, but overall, I'm seeing bullish over the bearish here. So not a huge bull case on why you should invest into Lulu, but overall not a entirely bearish case scenario here. In terms of Wall Street, this is where it actually gets really attractive here. The average price target for Lulu is sitting roughly around $438, so over 80% away from current valuations here. And the lowest price target is sitting around 396, so still offering 65% upside. So very, very attractive margin of safety in terms of a Wall Street analyst standpoint here. Next, I'd like to look at the insider selling. I want to see what management are doing. Are management selling out their stocks? Are they buying back their stocks? And in this scenario, in the last 3 months, I don't see much selling off of this stock. You can see in the 3 to 6 month category, yes, in December 26th, there was about a $700,000 sale for the company, but nothing significant recently as well, right? So it's very, very likely sitting at very, very attractive costs. And you can see that what this company is doing behind the scenes in terms of their share buyback program. In terms of their share buyback program, it looks like that prior quarter, it was one of their most aggressive quarters yet, right? The company was noted to repurchase 1.4 million shares for around 430 million, making it its largest quarterly buyback ever, right? So on top of that, they increased their buyback authorization by 1 billion. Ultimately, they're able to buy back nearly 4% of their current market cap as it currently stands today here. In terms of their financials, I want to look at overall their revenues, their free cash flow, their profitability metrics that we discussed previously. In terms of its revenue, it's producing 10.75 billion, growing revenue year over year by roughly around 7.3%. Nothing crazy, but the company is trading at a value or a price to earnings of 15.28%. We're also looking at its 5-year average, sitting around 15.28%, while its 5-year median is roughly around 45.4, right? So nearly about 4 times lower in terms of the valuations, in terms of the price to earnings standpoint here. So very, very attractive from a valuation multiple standpoint. The company is producing 1.58 billion in free cash flow annually with a free cash flow yield of 4.76%. Like I said, I love companies with consistently high free cash flow because what does that allow them to do? It allows them to reinvest for growth. It allows them to institute dividends. It allows them to repurchase shares, which this company is doing very, very aggressively. I'm going to go over sort of its shares outstanding graph here. You can see quarter after quarter decrease, quarter over quarter. So very, very aggressive selling of their or buying back their shares here, right? So what does that mean, right? That ultimately means that if you were invested into Lulu stock, it means that if they are buying back the shares, reducing that share count, it makes your slice of the pie that much greater here. So your shares are much, much more valuable as the company continually buys back their shares. So it's very, very favorable for us as shareholders, especially when the stock is sitting at very low valuations, right? It allows the company to utilize that money very adequately because the stock is sitting at low valuations. What does the stock need to do going forward? Just needs to grow the company, and their money, which is allocated towards buying back their shares, is going to be used properly. And as we said, this company has shown time and time after again, very strong profitability metrics. So return on assets sitting around 25%, right? When you're usually looking for 5% and above, return on equity is sitting at around 43.48%, with the return on capital employed 46.53%, right? So higher than their 5-year medians, this company is executing at a very, very strong and high level here. And like I said, this company is a premium brand. Premium brand meaning charging very premium prices. This company's net margins and gross margin respectively is around 16.82% and 59.34%. So very, very strong margins for a company like this. In terms of evaluating the company's balance sheet, this company has assets of 7.43 billion with liabilities of 3.14 billion, right? So this company is over 2 times its assets as compared to its liabilities. So very strong from a balance sheet standpoint here. Like I said, the balance sheet for this, or like I said, for these share outstanding for this company, they are buying back their shares massively. At one point, they had 124 million shares. Now they're only sitting at around 115.52 million shares, right? And that pace is growing quarter after quarter, year over year here. We saw the company in terms of its fundamentals. It looks very strong. So where is this company sitting at from a technical standpoint here? I'm going to pull up TradingView right here, pulling up Lulu on the daily time frame, and I'm going to show you guys why I think the stock is sitting at a buy here. So as of right now, June 15th, 8 p.m. here before the market opens tomorrow on Monday. The stock is currently sitting at 239.11 with an RSI of 27.02, right? So usually you're looking for 30 and lower. You're even getting below that, right? So on top of that, I'm seeing signs of a reversal and weakening of sellers as in terms of the RSI divergence here. You can see here, price action is falling down and the RSI is actually going up. That is that hidden bullish divergence that I'm looking for, and it's a telltale sign that a reversal is imminent in the future, right? It might not happen tomorrow, but I understand that this is a very key technical point where I can expect a reversal in the future, right? On top of that, the stock is sitting at a very strong demand. If I zoom out right here on the daily time frame, you can see every time the stock got close to around this level, you saw very heavy institutional buying and very strong reversal to the upside here. The stock is sitting about like 14-15% away from that 50 simple moving average, so you can likely see either a dead cat bounce or a total reversal towards that 50 simple moving average, right? The market overall and how the stocks operate, they usually revert back to that mean, right? What does that mean? Towards towards that 50 or that 200 moving average. You can see time and time after again, after the stock got very far away from the 50, reverted back here, reverted back here, reverted back. What do you think is going to happen after this, right? We're very far away from the 50 moving average. We're sitting in a very strong area of demand. We're seeing RSI divergence here. It's very likely we're going to get a reversion back into the mean towards the 50 simple moving average. And that in and of itself alone offers nearly a 15% upside, right? That's not even counting for the intrinsic value being roughly around 50% away, what institutions or Wall Street analysts are sort of predicting for the stock. So ultimately, that is why I see Lululemon as a screaming buy as of June 15th. As the stock is currently sitting at $239, the downside is extremely limited while providing very strong upside for the company here.